the Motown report card for the month gone by from autos as well. So let's start a little bit about all of this. We've got Digant Haria joining in on the show right now. Digant, hi, good to have you on the show. Are you surprised that two-wheeler sales haven't quite picked up? I mean, there's disappointment from Bajaj Auto amongst others.
Hi, morning, Aisha. Nice to be here. I think the pickup in the economy really happens, say after August or September. So not really a surprise. And see this Q1, this first quarter, the monsoon season, it's generally slow anyways. So I think not really surprised, but if these continues, well till September, October or the festive season, then that shall be a big surprise or a big negative surprise. I think the numbers have to pick up, in coming months. Otherwise, there is some problem. But yeah, we are hopeful. We are hopeful, Aisha, that it will pick up.
Okay, why are you hopeful it will pick up? Because monsoons are solid, interest rates have come down, yet demand is not making a comeback.
Nikunj, see, it's like the government gave a budget bonanza, then RBI gave a rate cut bonanza, then Mother Nature gave the rainfall bonanza. I think whatever can help in pushing up the demand, all those factors are very much there. And even now, if the demand does not pick up, then we have a slightly deeper problem, right? At least we should see some bit of pickup because all the macro factors are very much aligned. Even the metal prices are down. So, the two-wheeler or the car sell, those companies are not facing pressure, so they can give discounts. So I think a lot of things are in place, Nikunj, and maybe the festive season should be good.
What will come back? Will it be good old cars? Or two-wheelers also could see effect of good monsoon, low rate cuts and high benefits of tax?
I think it should be a mix of all. I think all the consumer durable names, I think, the air conditioners, the washing machines, everything else should also do well. And, in addition to that, I think, cars and two-wheelers should also make a comeback because this kind of a bonanza, we should be across the rural and urban both. And two-wheeler is more urban, the bikes are more rural, the scooters are more urban. So I think it will be across the board, Nikunj. At least that is what we are expecting.
Okay, although if you look at it, M&M's tractor segment, Eicher Motors, that's RE, and Ashok Leyland have continued to actually perform. And that I think, Digant, is a telling point because you've got a premium bike, you've got a farm equipment major, and you do have a CV player as well, which have done well and have posted above estimate sales. Do you think this also is indicative of leadership in all of these segments with Eicher RE, M&M Tractor Division and Ashok Leyland?
Yeah, I think, see, first, this is a season where, the tractors do well. So I think, Aisha, there are different cycles. I think the commercial vehicle space will probably slow down because we had 3 great years in the past. Tractors, if you see, last 2 years were roughly flat or, hardly any growth or even degrowth to some extent. We've not even crossed the 2023 numbers. So this year was expected to be a good year for tractors and good monsoons always play that, catalyst for the tractor numbers. So I think tractor numbers have come through and now I think it's time for, two-wheelers and auto, the four-wheelers to have a slightly better festive season. And I would even put, all these AC companies or the home durable companies in that same pack.
AC companies, interesting because they are going through a bad patch because of early rains. I mean, there are discounts everywhere. Yet you feel that one should look at air conditioning and air cooling stocks?
Yeah, see, Nikunj, air conditioning is a structural theme. It's probably one of the fastest growing categories, right? The category itself, is slated to grow at 14-15%. We'll only buy one fridge, one washing machine in our large homes, but we'll still buy 3-4 air conditioners, right? And then the penetration is hardly 6%. So it's a genuinely structural story. You will not find these stocks cheap. The only time when you find these stocks cheap is when the summer season has not been good. And, which is the, you find Voltas and, you find Blue Star, at a good 30% markdown from their all-time highs. I think, when the summer is not very strong, I think the AC sales do pick up around Diwali or, post that. So we are very hopeful that it's a good entry point. Obviously not for 1 quarter, but if somebody has a 12-month horizon, I think it's a good time to get into these themes.
Rest of the market, Digant, what's your view? Is it getting too easy? Is this as good as it gets for rest of the year?
Yeah, it's a complicated question, Nikunj. We all keep scratching our heads that we have a brilliant macro setup, like oil is down, US dollar, or the DXY is weak, gold is doing well, metals or the energy prices in India are down. So the macro, interest rates, RBI has pushed it down. So macros are as good as it can be. Micro, if we talk sector by sector, everywhere there are some problems. Like even if you look at banking, the large banks, they'll report a good amount of pressure on margins. The credit growth in the system is 9%. So, that macro, micro, they don't tally so much. So I think right now the rally is mostly, in response to the good macros. And if micros do follow up, which we feel they will around the Diwali or the festival season, I think that this markets will hold up, and you can have a stock specific, sector specific party continuing. But yeah, we are careful. Nothing to say that this party cannot end. But yeah, macros are good, so we are hopeful that the performance comes through. I think this 1-2 quarters, Nikunj, we still have to live with weak demand. Even in the markets, I think banking sector, especially the PSU banks, they are probably going to lead the this whole credit cycle and the demand revival for the country, because they are the ones who will first go out and lend. The private banks will always hide behind the PSUs and then do their lending. I think the government had a big meeting with the PSU heads, where probably they were told that, oh, guys, you need to go out and lend. 8-9% is not what India should be growing at. We should grow at 12-13 at least.
And Digant, I guess the litmus test is going to be out soon. You've got the earnings coming up, and we'll start off with IT as always. Do you think another uneventful quarter is what's in store?
I think so. The stocks are also not expecting anything big, and I think they have a high base. They have muted guidance. There is this AI risk, and there is this US economy which continues to oscillate between hope and fear. So I think it's a setup where IT will just and even the dollar is not strong. So I think IT will just do those technical bounces, and I think technicals are a better way to play IT right now than fundamentals, because fundamentally there is not much to really say that they'll do great or they'll do bad or whatever. So I think IT remains a firm in the firm trading zone.
All right, so IT remains in a firm trading zone. That's the call coming in from Digant. But, well, of course, other than that, we also have the defense counters that are still holding well, Digant, and we are seeing a lot of these news as well trickling in. One of those stocks is actually BEL, which is seen to be hitting its all-time high levels. What's your overall take coming in on defense as a pack right now? Yes, there are concerns with respect to valuations, but how do you see the sector as a whole?
Hi, I think see, the sector started its great growth journey from 2020 to 23. I think the sector is still doing pretty much well. It's growing at more than 15%. The good companies are probably growing at 20-25%. Order books are high. Sentiment is great. Defense spending across the world is up. So I think whatever good can happen is already there. Now the question is, the old investors should definitely stay put and enjoy the ride for a few more years. But for a new investor, it's always a point of discomfort. Maybe it has always been the case for the last 2 years. But yeah, the old ones can really enjoy the ride. The new ones have to really struggle and hope for a correction or try and find proxies. For example, all the shipyards are trading at really good valuations. It's very difficult to say that you'll make a lot of money from these levels. But people like us, we have no other choice but to find derivatives. Like shipbuilding involves a lot of welding activity, so maybe companies who supply those welding materials, those are proxies you can play on defense. But yeah, defense itself is very richly valued, but rightly so. And yeah, it's difficult for a value investor to really have a large stake in that sector now.
Yeah, couldn't be putting fresh money to work given the kind of valuations that you're currently quoting within the defense pack right now. But Rudra, I mean, BEL clearly seems to be the darling of the market right now. I think it's already up 30 odd % so far this year. How much more upside do you foresee?
Aisha, for me, when it comes to defense, you have to be very stock specific and selective in this particular sector, because valuations are trading 3-year forward earnings. And for me, technically on chart, yes, BEL is the #1 stock to buy when it comes to defense, followed by even HAL and BDL. So these are 3 stocks from the defense sector which I like. And specifically on BEL, yes, on charts, stock is trading at all-time high, can head towards that 480, 500 levels very soon. And yes, with a stop loss of around 410, I will be looking to buy every dips to that 420, 425 mark. Even at current market price, it's a buy. In fact, in today's buy call, I had just mentioned BEL only, and I feel this stock is headed towards that 480, 500 zones immediately. One can accumulate at current market price, and on dips to 420, 425, have a stop loss of around 415, and for sure 480, 500 is a matter of time. BEL will go there.
That's about BEL, but Digant, just wanted to have your take on what's really shaping up when it comes to the paint sector. The reason I ask this, as we know that with JSW Paint acquiring AkzoNobel, they are actually aiming to become the 3rd largest entity within the paint sector. But on the other side, it's Asian Paints and Grasim as well, wherein the Grasim is actually saying that for Asian Paints, they're actually abusing their dominant position. They're trying various methods in order to keep that market share leading position at this point in time, and CCI has actually ordered an investigation as well. How do you see the picture of the paint sector shaping up right now, and what this could actually mean for the companies involved?
I think it's 3 years of pain for the leaders like Asian Paints and Berger Paints. Right from when Grasim announced and JSW announced their entries, the sector has been under pain, and it was just a coincidence that even the category growth declined in those 3 years. From 10-11% sector level growth, we are down to 2-3% kind of a sector growth. So the growth is down and competition has increased. So net, see, the sector does not become very attractive, as it was in the past decade. But yeah, we can say that, probably the worst is over, because one player has reduced. AkzoNobel has sold itself out to JSW. So there is one player less to contend with. But having said that, this Birla, Opus and JSW, they still have to use their capacities and, sell their products in the market. So it will take some more time for the sector to really start the normal economics. And when I say normal economics, it is 10% kind of a revenue growth and, maybe 12-13% kind of earnings growth. Even that modest expectations, I think that is sometime away. So while we can say that, a lot of these paint stocks would have bottomed out in terms of the price performance, but it's not as if that if they have bottomed out, they'll go up 30% tomorrow. I think the returns, for making returns, it's still another 12-18 months of wait period, where you can see good gains. And yeah, Asian Paints is known to have, very aggressive market practices when it comes to distribution. And see, when there's competition, these things do happen. It's just it's just what happens in the business side of things. And yeah, Asian Paints will probably pay some fine, and things will move on. That's what we think.
Yeah, absolutely. In fact,